Hello, hi dear students. Today we will take IND AS 103 business combination. I am Shanmugam. I am leading SSNGM Academy. So here I will try to provide some material on CA final courses, and this is on financial reporting. IND AS 103 is a kind of important subject in financial reporting. Yeah, let's see, and please follow the rest of the videos. So let's get into IND AS 103. So now IND AS 103, as I told you, it talks about the business combination. So here in this slide we will see why the business combination is important nowadays. So basically, if you see in the olden days, if a business needs to grow, they will basically grow. They used to grow on an organical basis, meaning they will have to find some marketing team to promote their products, and if the market is growing, then they'll have to put some more investments and then make adequate production, then expand their business, have more manpower. So like this, they have to wait for long time for the growth. But instead, in the modern days, if the entity can find some other entity which already in the business what they wanted to grow, and they already have enough setup capital, running business, everything, then the person can go and acquire that business directly. Of course, he might have to pay some premium because it's all ready to eat kind of thing. So he can immediately invest and then take over the business and then grow. They can have the growth perspective. So this is where the business combination nowadays gains good momentum. Yeah, so in this slide we will see what are the accounting guidance needs to be followed for the business combinations. So meaning when a business going to acquire another business, what are the accounting guidance needs to be formed, that's already given in detail in IND AS 103. So that we'll run through in these slides. So just to note, this IND AS 103 guideline needs to be followed for all the companies for which IND AS is mandatory. So you must be knowing those companies having net worth more than 500 crores should follow the IND AS. And if it is a non-listed company, if they have net worth more than 250 crores, they should follow IND AS. So those companies follows IND AS. I mean, for them, of course, this IND AS 103 business combination is equally applicable. Okay, so now let's get into a little bit more detail. So to understand business combination, so we have to first understand what is business, and then let's further understand how the business combination defines. So to understand business, we have to ensure three conditions are met, then only that will be qualified, those transactions will be qualified as business. So what are those three conditions? So first input, and second is process, and third is output. So in any business you see there will be some inputs. So input may be in the form of the raw material, the factory setup they will have the skilled manpower, or even if you take consulting services, there will be a consultant who uses his knowledge and then provide appropriate solution to the who are seeking those consultancy work. So in this case, there is a kind of input. So the business can be a factory or manufacturing setup, or it can be even a service provider. So as long as the business is having input, and then I will explain you what process means and what output means. If these three conditions are met, then it might qualify as a business. Okay, so then I will jump into what is process. So I mean, it's nothing new. So any process, like the company is having a good system, there is a standard, there is a protocol, there is a rule, there is a convention. I mean, they have been following the process over the period of time. So these things, these things called as process. So using this process, the company converts the input, applying the process, and then generate the output, right? So yeah, business should have a process. Okay, so in the example I have given, manufacturing process or even the consulting work done. So here the manufacturing process or the or even if we take the manpower which is, I mean, who are involved in the manufacturing process, should be a kind of unique thing. I mean, we can divide this into core function and support function. So here what we talk is a core function. So which probably may not be generated quickly post the acquisition. But if you take support function like accounting function, invoicing, payroll, administration, so these functions are kind of support functions which is not so critical, and this can be developed very quickly post acquisition. So here in terms of process, we are talking only the core process or core functions or core manpower, and not the support functions. So that we have to be a little bit more clear, and I'll try to give more examples in the following slides so that you will have a good understanding. Okay, then the third condition is the output. So output, basically when you apply process on the input, then of course you will have output. So output should have some economical value, so then only it makes sense to the business. And yeah, so output probably when you acquire the business, at that time probably you will have the output, or at the time of acquisition probably there is no output. But if the company or if the business has potential to generate the output by applying process over input, then of course that will also be qualified as an output. Okay, so these are the three conditions. Hope you can understand very clearly. If you want, you can also read through the material and then watch the video once again and get these concepts very clear, because all the subsequent slides have a reference to this note on business. So please be very clear on the term business. Okay, so then coming to business combination. So business combination, how it is defined, it's a very simple definition. So this is a transaction in which one business called acquirer obtains control of another business. So there are two business, one acquiring the another business, so it's combined together, so it's called a business combination. Okay, done. So then I will move to the next slide. So here I wanted to summarize on the conditions to qualify as a business combination, because there will be some nitty-gritties, and we'll have to clearly understand a particular transaction, whether it is really the business combination or it could be a normal asset acquisition. So these are the conditions that we have to satisfy to qualify as a business combination. So first, the input needs to be acquired, and the process also needs to be acquired, and you have the option to either acquire the current output, or if applying the process over the acquisition can generate the output over the period of time, then that's also fine. So this is one condition, and there is one more test also we should do, which is called the concentration test. So here in the concentration test, yeah, so here we will also see whether a particular transaction is a business combination or it's a mere acquisition. So maybe you can just read through this, and then I will explain you in a while. Yeah, so here these three steps for concentration test, you should be very clear. So the first one is measure the fair value of the gross assets acquired. Suppose if a business acquires another business, then we have to see what is the fair value of the acquired assets, and then identify if there are any single asset or the group of assets. Then as a third step, we'll have to see whether the acquired assets versus the fair value of the gross assets, what is the ratio. If the ratio is substantial, then it can qualify as a business combination. If the ratio is not so substantial, then it might be a mere asset acquisition. Okay, so here the fair value of gross assets, what I meant is fair value of the consideration what we pay plus what are the liability the business has assumed minus if there are any cash has been taken over and if there are any debt tax assets or liability that needs to be adjusted. Okay, so I will give one more example that will clearly explain what is the business combination asset acquisition. Okay, so before that slide we'll have to little bit understand what is the difference in accounting business, I mean a difference in accounting the business combination and asset acquisition. So here if you see in case of goodwill, so you must be knowing what is goodwill. So goodwill is if you pay more than the fair value of assets acquired, then it's a goodwill. And in terms of business combination we have to recognize the goodwill because whatever we pay to acquire the assets, then it should be fully accounted for. So even if it is beyond the fair value, even then we have to account for the goodwill under business combination style. But under asset acquisition style, then I mean goodwill cannot be recognized. So whatever you pay will be treated as fair value. It's not that you are paying more than the fair value. So under asset acquisition method, goodwill is not getting recorded. Then next is capital reserve. So capital reserve, it's opposite of goodwill, which means you pay less than the fair value of the assets acquired. So in this case, under business combination, yes, the capital reserve also needs to be recognized, but in the asset acquisition model, this should not be recognized. Then contingent liabilities, yes, under business combination, because you are acquiring the entire business, if there are any associated contingent liability in the form of or while acquiring the business, that also post acquisition the acquirer needs to carry those contingent liability, so that should be recognized, but this is not required in the case of asset acquisition. Then deferred tax, of course deferred tax, it's I mean just to explain what is deferred tax. So you will be having the statutory financials at the time of acquisition, and there will be some tax records. So you have some transactions recorded in statutory books but not recognized in the tax book. Then there are differences. Those differences predominantly we will classify between permanent difference and temporary difference. So permanent difference, it's anyway there is no need for any accounting entry, but for wherever there is a permanent differences, then we have to quantify what is the tax benefit. One can it may be benefit or even a liability. So it may be deferred tax assets or deferred tax liability, so that will be recorded at the time of acquisition, and these deferred tax assets and liability expected to be nullified over the period of time once those temporary differences are offered for tax. So these deferred tax should be recognized in the business combination model, but of course this is not relevant under asset acquisition model. Then coming to stamp duty, so stamp duty, it's kind of registration expenses. So at the time of business combination there will be lots of registration activities will be there. So, but under business combination it's kind of operational expenses that should be charged to P&L directly. But under asset acquisition, since it's expenses towards acquiring the assets, that should be capitalized as part of assets. Done. Okay, then I will move to the next chapter. So here I will explain you some of the examples. Based on the concentration test I just explained to you. So probably I want you to read through this example, and then I will please take some time, then I will explain you the answer. Okay. So let me explain you the answer now. So here the company pays 1000 crore in cash to acquire the equipment and patent, and apart from cash they also transfer the land, and fair value of land is 400 crores. So in total the company pays 1400 crore to acquire equipment and patent. and it has been given that the fair value of the total assets acquired, that is the equipment and patent, put together it is 1500 crores, but they have not given the individual value, how much of 1500 crore to be allocated between equipment and patent. So to allocate that, what we can do, we can just allocate on a prorated basis. So okay, sorry, so it has been given out of 1500 crores, 500 crore is the fair value of equipment and 1000 crore is the fair value of equipment. But again, this is not relevant. What for accounting, we have to account only 1400 crores, because that's the value what has been paid. So here we are not going to recognize any capital reserve. So theoretically, if it is a business combination, there is a capital reserve here, that 100 crore, 1500 crore minus 1400 crore, what the company is paying less than the value of fair value of assets acquired. But since it's a mere asset transfer, we will not account the capital reserve. So we have to account only at 1400 crores, right? So now 1400 crores will have to bifurcate between the equipment and patent. So we can just take pro rata. So 500 crore is the fair value of equipment of the against the total of 1500 crore, but now total comes down to 1400. If you do pro rated, then equipment value will come to 467. Similarly, patent value will come to 933 crores. Okay, so then we'll have to make the journal entry. So journal entry to record the asset will be like this. So we'll have to debit equipment by 467 crores and patent by 933 crores. That these two are debited, so total of debit will come to 1400 crores, and the credit goes with the cash payment 1000 crore, and the book value of land, it has been given as 100 crores. So remaining 300 crore, it's a profit and sale of land, so that should be credited, right? Okay, so then let me move to the next slide. Just give a minute. Yeah, okay, so this is the first example, then I'll move to second example. So again, take some time to read the question, then I'll explain you the answer. Yeah, so here the company X is a business, because it operates a trade with a variety of assets that are used by its employee in a number of related activities, and these assets and activities are necessary integrated in order to create and sell the company's product. So as per the definition, the above accusation includes an input. So we have the input and including 4 main executive directors of the company X, and thus it can be concluded as a business transfer. Right, okay, I think it's clear. So it's basically all the 3 conditions have been satisfied. So we have the input, process and output. Okay, so now let me move to the next example. So again, you can take some time to read the question. So here this is also a business combination, because all the 3 conditions have been met. So input is there, process is there. Only thing is there is no existing output, but there is a potential to generate output over the period of time post acquisition. So potential output will also be taken as a qualified criteria to qualify as a business combination. So this is considered as a business combination. Okay, then I will move to the example number 4. Yeah, so again, take some time to read the question. Okay, so this particular situation, this is not a business combination. So even though it qualifies input condition because there are some properties under lease and there are some maintenance activities going on, all these things are fine. But again, these maintenance and security services are kind of a routine activity. Even post acquisition, these can be done separately by the acquiree. So it's not a critical function that that qualifies as a business. And output condition also is also met. There are some revenue income, rental income, so that's fine. So input met, output met, but process is not met. So so this cannot be considered as a business combination. It will be mere asset acquisition. Okay, so just read through example 5. So this is also a bit of a similar situation, but here there are some 5 employees under the company who are actively maintaining the property, and they are also involved in identifying the tenants. So they are heavily involved in the process. And yeah, so I mean this kind of skill will take some time to develop post acquisition. So since this kind of service is a bit critical for the business to run, so we can consider this as a business. So all the 3 conditions are met here: input, process and output. Then I'll move on to example 6. So just read through the example. Yeah, so here also the company all the 3 conditions are met. So there is a input in terms of trade, assets and workforce, and there is a plant being acquired, so the process condition is also met. And the company has the sales income, so the output condition is also met. So this situation can be considered as a business combination. So not acquiring the payroll and accounting is not so material because these are only support function. So it's not so critical to run the business. Now I'll move to next example 7. Yeah, please take some time to read through this as well. So here also the process condition is not met, so this will not be qualified as a business combination. Okay, and then I will move to next example 8. Yeah, take some time to read the question. Okay, so here also all the 3 conditions have been met. So there is an input in terms of R&D activities, manpower, IPR and plant, and there is a process because plant means there is an existing process being taken over, manufacturing process being taken over. And there is output because it can generate the sale produce over the period of time. Yes, so this is a business combination. Then last example, so in just continuation of the previous example, so here the critical sales function has not been taken over, but again the sales force, we can consider the sales force can be generated by post acquisition because the critical process has been taken over. Sales force compared to input and process, it's not that much critical. So over the period of time the query can generate the sales force, and then of course they can also use their own sales force to continue the sales activities. So I think this can be qualified as the business combination. Right, so in this material we talked about IND AS 103, what is business, what is combination, and what is input, process and output, and various examples to, and then applied the concentration test to determine whether the particular transaction is can be qualified as a business combination or will it be a mere asset acquisition. So these concepts are very important to go through the further chapters under business combination. And then we will also go through how, I mean, post acquisition, how the two entities can be merged. So all the consolidation activities and accounting guidelines we will go through in the next class. Okay, so thank you. Hope you have taken something input from this lecture, and please give in case of anything needs to be explained further. I will look into it and then try to further add this video. Thank you.